Just we have Mr. Nilesh Shah, MD of Kotak Mahindra AMC, joining us, and it's great to have you, Nilesh bhai, simply because I think people would want to hear how should they think about their investing strategies, their portfolios, and what could happen per se to markets and economy by and large. In talking about markets, we try and not quite look at whether this verdict as it stands right now has the potential to change the economic impact as well. How do you think about all of these things currently?
So right now, we are in an unprecedented situation, just like in 2004. Market was expecting continuity of government. The results were against market expectation. And then there was a circuit down. Now, at that point of time, anyone would have taken a view that, let's go and short the market, let's go and get out of the market, because first time we would have seen a circuit lockdown on the market. But thereafter, we did witness one of the biggest rally based on the strong economic fundamentals we had. So one point, our economic fundamentals are reasonably good shape. Undoubtedly, the current result is against market expectation, but our fundamentals are in place just like they were in 2004. Number two, so far, even right now, 1/3 of votes are counted. 2/3 of votes are still pending. And the margins are, fairly slim in a fair number of seats. And we could see a swing either way. And I heard Kushal mentioning that this is not the time to take any dramatic decisions. Situation is evolving. Might as well wait out when the storm is brewing and take a view after, data is available. I think over a period of time, political parties will take a call and analyze what these results mean. There will be adjustment in government policies to respect election verdict. And then there will be opportunities in the market. Market invariably, discounts things in emotion and then builds on rationality.
Alex here, just want your view, because I know that you look at this market very closely as well. I'm talking about the bond market, and of course it might have been put on in the background, but we've seen the 10-year yield move up quite substantially as well. How do you look at fixed income as well? And maybe we not spend too much time on that, but we must talk about that as well.
So my feeling is that at least on the fixed income side, there is a reasonably good opportunity to lock into higher yields. Forget today, but over next 18 months, we do expect US Fed rate to cut rates. We do expect inflation to remain subdued, especially on the core side. And we do expect debt foreign investors to participate in Indian debt market, thanks to inclusion in JP Morgan bond index. Put all these things together, over next 12, 18 months, will the big figure of 10-year yield move from 7% to 6%? We will say quite likely. This is time to lock into duration. There will be moves up and down, but this is time to lock duration with a medium-term view.
Nilesh bhai, I know for a long-term investor, the India story is promising, etc. If I were to urge you, because you don't normally do that, right? But I would urge you. Your job enables you to invest systematically, right? Or to advise people to invest systematically. But if I were to urge you to wear a tactical hat, do you think that there could be a further period of nervousness in the market until the things become clear, and that might take a few days maybe?
Undoubtedly, Neeraj bhai, while our economic fundamentals are in place and even there is a positive news on oil, which has gone below $80, right now the driver for the market is political formation. Unless until we know what kind of government is getting formed, unless until know what will be their priorities as they analyze this verdict, market will remain on tenterhooks, market will remain uncertain. But at the same time, when pendulum swings on the other way, opportunities arise. For example, Neeraj bhai, we have been talking for last almost 6-8 months that low floating stock PSU counters looks expensive on valuation. We were proven wrong for almost 5 years and 29 days as those stocks continued to go higher and higher. But today, there is a massive correction over there. So at the end of the day, it's always difficult to predict where the pendulum will stop or from where it will swing back. All you can take is a call that now this is reasonable value to buy or this is reasonable value to book profit.
Samir Arora, founder and fund manager, Helios Capital, also with us. Samir, good afternoon, if I can call it that. But my question really is this: had the verdict been different, 2021 times markets don't look expensive, the verdict is different, and suddenly a 17-18 times market also may not look cheap. How are you thinking about the pendulum currently?
So first thing is look at it that if, say whatever is the number now, let's assume that number is right, which is 295 for NDA. If this number had been the estimate in the exit poll on Saturday, then what would have happened on Monday or Tuesday? I don't think it would have fallen much more than 2-3% here or there. Part of the reason why it's falling so dramatically today is because it went up dramatically yesterday. And maybe more people piled on. Obviously, they must have piled on for these stocks to have gone up yesterday 10%, and those guys are now throwing them back. But at the end of the day, we are today taking it as if there is a change of government. For that, this kind of a fall is justified maybe. Because as Nilesh was saying that, we don't know the exact priorities of the new government. And normally my problem with the new government is that they try to start every program from zero. Even if a good program is running, they want to rename it, rebrand it, and therefore stop its connection with the previous government. And therefore, everything has to be analyzed from zero. But if it is in some form the same government, maybe with two coalition partners, that does not mean that everything will be reversed. For example, nobody was saying that the defense sector stocks will be privatized. It was just that you have a policy to give more business domestically, have negative list, encourage domestic production. Now, who is objecting to that? What is the politics behind it? Nothing. So these things can be done. In oil and gas, nobody's asking that you subsidize oil prices. So that is continuing as it is. You may say that, okay, now there will be some emphasis on, handouts and subsidies because the BJP government may take some feedback that this is what was offered and therefore the deficit will be 30 basis points higher. Now, last week, the deficit turned out to be 20 basis points lower and nobody cared. What I mean is that these things are part and parcel of, changes that you may make in your portfolio. But why should, now I don't know, but till 10 minutes ago, HDFC Bank was down 6%. What is its connection with any government? Or is Zomato being down 10%? What is the connection? You may say there is a connection for 3 companies, 4 companies, 20 companies, but why for every stock? So I think overall it will settle down, and we still don't know even what is the new government. So why are people dumping today? Yesterday, at least, they were buying on the basis that the same government is coming back and with a bigger majority. But today, what is the basis? You already assume that everything will change. And I don't think everything will change.
Everything won't change. Samir, Alex joining in. I'm just curious. So in the event that, as you pointed out, 290 or thereabouts is what I can see on the screen right now for the NDA. It's still majority. And of course, these numbers are changing as we speak. But having said that, NDA majority, of course, the doubt that some people have is that
the coalition partners will join India.
No. Even assuming that they don't, the policies that have, or the fact that this government has refrained from dole, the fact that
I agree. So I'm saying some of them may change. So that's what I'm saying. Let us say that now they do spend some money on giving subsidies to rural, or they cut some taxes for middle class, and therefore the deficit goes up 25 basis points more. Although just last week it was, I think, 0.2% less than what was expected for previous year, and At the start of this year, you got I think $25 billion dividend from RBI and you spend it on other things. So what happens? That money also will go and help some other consumer company. Anyway, you will take 18% back as GST. What I'm saying is, do you think this market has gone down? Because we thought that the deficit next year will be 5.1, but actually it might turn out to be 5.5. You think anybody in our market relates so precisely? But the regular policies, why will they change? The fact that you want to bring power to everybody because power is a hot item, or you want to make roads, or whatever you thought that the government would have done if they had nobody else interfering with them, those why will they change? You may do a little bit more and spend more money of the government and have a slightly higher deficit of not obscene levels, but 20, 30 basis points extra. So what happens? Nothing happens.
Maybe the street
The only
is.
thing that happens is if the government changes, because then, as I said, everything stalls for 5-6 months, and therefore referring to 2004 is fair because there was a complete change and priorities may have changed. Although in the end, I don't even remember what changed because we had our biggest bull run of our life from 2004 to 2007.
Yeah, that's true. Nilesh bhai, it's a valid point. The skeptic might just argue that a lot of reforms/future growth was priced into equities. I mean, Sameer's point is very valid, but just that whether the valuations priced in a lot of these which are yet to be delivered, and therefore does the market take a step back, wait for it to be delivered before giving it the thumbs up, which it might have otherwise if the verdict was not what it is looking right now?
So as Samir Bhai was mentioning, markets will swing from optimism to pessimism. It's never going to price the actual things. If next government's priorities or policy push, let's say, is more or less in the similar direction, then market has no reason to become overly pessimistic. They will focus on what our earnings growth is. Oil prices are today down from 80 to 77. OPEC is increasing oil production over next 12 months. All those things will come into play once this uncertainty is behind us. Today, as Samir Bhai was mentioning, it's the exit poll rally which is also getting unwound. My feeling is that this is not the time where you take portfolio decision. This is the time where you just watch the market, let the traders have a field day. For investors, there will be time to build portfolio looking at the new government formation and their priorities.
Point, right? For somebody who doesn't wear a tactical hat, also talking tactically, I'm inclined to ask you, are you being tactical today?
May I say one thing?
Yeah, please.
So yesterday, State Bank of India went up 10%. Which policy of the government was related to saying that when we come to power, we will do something? Could be privatization, selling strategic stake to State Bank of India. Nothing. It went up 10% in excitement. And now it's fallen 15%. So I'm saying yesterday somebody could have built the logic that the State Bank of India is up 10% because a lot of FII flows will come immediately and therefore they will buy large institutions, but it could not have been related to government formation. It was just overall excitement about buying into the market. And now those guys, because there's no connection with State Bank, but they have just taken an extra position to celebrate, are now selling. Now, beyond 3 days, 2 days, 4 days, how will these stocks? That's what I'm saying. You can at least connect for some stocks where there might be a policy angle. But some other, as Zomato is down 10%, what policy will be changed by the new government relative to the old of a State Bank, of a HDFC Bank, my all-time favorite. But for some others, you may say, yes, okay, defense ABC will happen, and for power finance, something will happen. Okay, change 3 stocks, 5 stocks. But the whole market being down means it's being done on a bigger fear. And that fear, I don't see what is the logic for that fear.
Which therefore, I'm just prompted to ask you, are you being tactical right now? I buy your point. Let's assume that there's not enough reason for to be so pessimistic. Are you still being tactical because the crowds in their wisdom might be pessimistic and you might want to be tactically taking advantage of that and maybe waiting for lower levels, Samir?
No, so I will look at buying or changing a few stocks maybe after 4 or 5 days, or maybe even tomorrow or day after, once we know what exactly was the, who's there and whether it looks realistic for the same government to come back or not. Because if the BJP is at 260, nothing the coalition can do about it. If they're at 240, maybe you can say there'll be a role of a coalition partner and they might extract some pound of flesh, but let them extract, let them take suppose they take home ministry. We don't relate to all these things, right? What I'm saying is some of these things are at a different game. It doesn't mean that the stock market appreciates that for one sector you actually have a coalition partner as whatever, or maybe some other deal is done with him. But at 265, you may not need that. So I'm saying today to be hyper about it and to bring stocks down 25% is like some sort of, I don't understand the logic.
Hi Samir, hi Nilesh, Tamanna here as well, and I get your point, and especially the point you made about Zomato. Perhaps there's going to be more orders this evening. Either people,
and now
want
only 4% by the way.
People want to perhaps eat their way out of what they're seeing on their portfolios and are going to order more. So I get that point. But Nilesh, I wanted to come to you on the very important point of policy making and policy decision, because at the end of the day, from a market's perspective, apart from anyone's personal preferences of which political party they like or dislike, it is about how efficiently and pro-development are the policies going to be. Do you see that as hampered greatly if you have a government where the BJP is not in pole position, not 272 on its own? I mean, at the end of the day, that's the basic question, isn't it?
At the end of the day, for market, it is the policy direction, it's the economic and earnings growth, and it's the certainty of continuity of policies. Today, undoubtedly, there is worry on the government formation, but by the evening or next few days, we'll have some clarity over there. There will be an adjustment. But do remember that many other parts of the market, in terms of earnings growth, in terms of corporate debt to GDP ratio, in terms of our peers not having the best time, are all still valid. 8.2% GDP growth for FY24 was one of the highest in the emerging market and developed market. As long as earnings growth continue, do remember that stocks are slaves of earning power.
We will have to take a very quick break. Samir Arora, Nilesh Shah, thank you so much for speaking with us.